The stock market continues to hit new highs despite rising coronavirus cases and more economic shutdowns. Investopedia has been surveying its readers throughout the pandemic to get a pulse of investor sentiment and behavior. Joining me now to talk about the findings is Investopedia's editor-in-chief, Caleb Silver. Caleb, always good to see you. I know you're fresh off wrapping this latest survey, and I'm curious if your readers have great expectations for 2021.
Way to drop the Charles Dickens reference in there, and absolutely. 77% of them, Alexis, think that the markets will be higher in 2021. About 20% of them think they're going to be 10% or higher. So very bullish, and they've been bullish since we've been surveying. I've spoken to you several times over the past 6 months. This is the 7th survey we've done. We did this one right after the vaccine news started dropping in November, and the bullishness is at an extreme level, not only with our readers, but also with the American Association of Institutional Investors, also with big money, big institutional investors. So the bullishness and the sentiment is very strong, and it's that vaccine news that's opening up people's optimism and thinking that we're going to get higher highs in the places where we've been getting them for the past 6-7 months.
So do they believe that U.S. equities are going to lead the advance in 2021? Where do they see most of that strength coming from?
Sure. It's a lot of home cooking, and these are U.S. investors, and they think the returns are going to continue to be in the U.S. Even though other emerging markets in China have been outperforming over the past several months, they think the U.S. is going to have higher returns, and they think it's coming in big tech, they think it's coming in pharma and healthcare, and they think a lot of that has paved the way because of the election, but also the vaccine news. But with the election out of the way and what they think will be sort of a gridlock Congress, they are expecting higher taxes, but not right away. So they think it'll be a continuation of the same elements that have brought this rally from April to today, higher highs, record highs today. They think it's going to be a continuation of that going forward, and they're bullish.
You know, I hope we're seeing a little bit of a healthy dose of pessimism here, right? Because things can't go up, up, up forever. What are they telling you, your readers, about possible headwinds for the market next year, or things they believe could trip up the recovery?
Sure. It's COVID. It's the resurgence of the virus. It's been that all along. Ahead of the election, it was the election, and then the aftermath. The concerns about social unrest after the election were heavy on their minds, and they were not as bullish in October. But as soon as we sort of cleared 3-4 days past the election and the outcomes started to come together a little bit more, they've been worried about the resurgence of the virus, but very bullish on stocks and buying hand over fist, as you've seen with institutional money. Institutional money, Alexis, as you know, was out of the stock market from April till about October. And then we saw record inflows week after week. Individual investors, our readers, and also those surveyed by the AAII are also very bullish and buying stocks right now. Higher highs usually beget higher highs, but as you know, this could be a contrarian indicator. When everybody rushes into a crowded trade, usually the bottom falls out eventually, big money leaves, and the herd follows after. I'm not saying it's going to happen this time, but that's always the risk.
Well, speaking of which, you know, you look at tech stocks, they're back in vogue in a big way right now. We had seen that move out of growth into value for a while. Looks like it's moving back the other way. Do you see that rotation happening in a meaningful way, Caleb? And do you think it can continue well into Q1?
Yeah, I do. And it's this ping pong effect. You see it on the daily basis. When the vaccine news is good, you see the cyclical sectors, the value sectors rally, the banks, energy, transportation rally. When it's bad, when it's uncertain, and we have mounting cases and daily records for viruses and deaths, you see that trade going back to the safety trade, which is funny because it's growth. Shouldn't be safety, but that's where the money's been all year. So it's this ping pong back and forth. But within the other part of the cyclical trade, when we see value stocks rise, we've also seen the defensive sector, not defense stocks, but the defensive stocks, those with dividend-paying stocks, tried and true. A lot of our readers are 55 and older. They revert back to those stocks. So it's this kind of rotation within the rotation, and then the extremes of extreme fear, I'm going back to tech and gold, or extreme confidence, I'm going to play the value sector rally, and I'm going to play the metals.
I'm curious if they gave you any feedback, your readers, on the idea of stimulus. Are they concerned we're not going to get another stimulus relief package, or are they banking on the fact that we will get one and that's what's going to help lead us higher in the new year?
Great question. It's not stimulus per se, it's government spending. They know government spending's coming because of the Biden administration, because we potentially have this gridlock in Congress. We'll see after those runoff votes. But also, Janet Yellen, if she's the Treasury Secretary and she gets appointed and confirmed, she's a monetary policy dove. There will be more spending. Spending, low interest rates, and relatively low inflation is a good recipe for stocks. It has been for the past 4 years. It probably will be for the next 4 years, too, absent a black swan event like the one we've just had.
You got some smart, thoughtful readers there, Caleb.
The smartest.
Caleb Silver,
The
editor-in-chief
smartest.
of Investopedia. Thanks so much for being with us.